Picture this. Bitcoin is soaring, Dogecoin is on fire, and everybody's talking how crypto is the future of money. Again, it is hard to ignore people getting rich around you and talking about early retirement due to their crypto gains. At the same time, you might be fearful of missing out on the greatest opportunity of your lifetime. But is it really a dream? Or can the dream quickly turn into a nightmare? In crypto, one wrong move and you can find yourself watching your gains vanish overnight. So before you dive in, let's take a look on what's really going on in the crypto market and if it is as golden as it seems. The cryptocurrency market has seen a remarkable surge, with Bitcoin reaching almost $90,000 for the first time in history. This new record is part of an ongoing post-election rally driven by the victory of Donald Trump. Trump has promised to introduce pro-crypto policies which caused excitement in the markets. The Bitcoin climb, which also saw it break the $80,000 mark just days earlier, shows confidence in the market. The price of Ethereum, the second most valuable cryptocurrency, has also seen gains of over 20% during the last week. Other cryptocurrencies have also surged. For example, Dogecoin in particular has surged over 150% since Donald Trump's win. And this might sound crazy, but the rally caused Dogecoin's market cap to surpass Ford. At the same time, this uptick extended beyond digital currencies, also boosting related stocks such as Coinbase, causing its share price to grow over 50% in less than 5 days. Trump's win, alongside the success of pro-crypto candidates in key races, has set the stage for the crypto industry to thrive under the more favorable regulatory environment. With Republicans poised to take control of the Senate, analysts predict that Bitcoin could rise as high as 125,000 by the end of the year, mainly fueled by the anticipated easing of regulations. But is it realistic? Let's take a look at the risks involved. While it is easy to get swept up in the excitement of Bitcoin's recent rise, you should be careful when investing in crypto. Yes, Bitcoin reaching 125K is possible if the rally continues, but it is not a guarantee. From the simplest value investing perspective, it's usually not the best idea to throw your money into something that has just reached an all-time high, especially when it comes to something as volatile as crypto. You have to remember the Bitcoin market can swing drastically in a matter of hours. So while the rewards can be huge, the risks are just as high. It's crucial to remember, don't go all in. Diversification is key in any investment strategy, and putting all your money in crypto can be extremely dangerous. The market can shift, leaving you with significant losses if you aren't careful. I mean, let's go back to Dogecoin. It's a meme coin that started as a joke with a dog on the logo, and its market cap managed to surpass Ford. Do you really think that investment in a meme coin can't be destroyed in a matter of days or even hours? I understand that it can be fun, but you have to keep it in perspective. You shouldn't gamble everything on something that can disappear as fast as it appeared. So, to fully understand the risks, let us look at some historical examples. In 2017, Bitcoin reached an all-time high of nearly 20K just to crash back down to 3K in the year 2018. That is a drop of over 85% in a single year. In 2021, Bitcoin soared to an incredible $68,000 mark, before tumbling down below $30,000 in mid-2022. And more recently, in the wake of some global economic events, Bitcoin has fluctuated between $40,000 and $60,000. These dramatic price swings can be heart-stopping for investors who are unprepared. The same volatility applies to altcoins like Ethereum and Dogecoin. It is a roller coaster, and you need to be ready for the ride if you're planning to invest into this space. So what is my stance of Bitcoin and cryptocurrencies? I'm probably not as radical as most value investors when it comes to the crypto sphere. Before I found value investing, I actually owned cryptocurrencies. Also, I do not think that crypto is as useless as a lot of people tend to say, as I myself have made transactions with crypto in the past. However, now I take a different approach to Bitcoin than other cryptocurrencies. When it comes to value investing, it's about buying into businesses that generate future cash flows and that you can evaluate based on solid fundamentals. But with crypto, it is a different story. Bitcoin is not a business. It's a commodity that doesn't produce cash flow, and you can't evaluate its value the same way you would do with a traditional company. With traditional investments, you can look at factors like earnings, revenue, market share, potential future growth, which allows you to assess the future value of a company. But with Bitcoin and other cryptocurrencies, these metrics simply don't exist. The price is largely driven by speculation, sentiment, and external factors, such as government policies, global economic shifts, and of course, market hype. While I acknowledge that crypto might have a place in some portfolios, it doesn't align with my value investing principles, just because my main focus is on intrinsic value and long-term sustainability. To be honest, this approach helps me sleep calm during the nights, as I'm less likely to see crazy fluctuations in my portfolio. So while cryptocurrency is exciting and rapidly evolving space, it doesn't come without its risks. Yes, the recent surge in Bitcoin and other cryptocurrencies due to favorable political developments is impressive, but it doesn't change the fact that crypto is highly volatile and speculative. If you're still considering investing into crypto, I urge you not to go all in. You have to understand the risks and know that the prices can swing wildly. I would be cautious of putting my money into assets that cannot be evaluated based on cash flow or tangible value. Whether you decide to dip your toes or stay on the sidelines, make sure you are aware of the potential downsides. When it comes to investing, you have to remember this one big thing. It's not only about finding the biggest gains, but also managing the risk along the way. Now, let's hear it from you. Do you yourself own crypto, and what is your stance on it? And as always, guys, I really appreciate you watching my videos. If you enjoyed it, please consider subscribing and clicking the like button. If you have any suggestions, leave them in the comments. And again, thank you, and I hope to see you in the next one. Bye.